Greetings, everyone. We are very excited to host another Lion's Roar, a special version of Ubuntu, a global dialogue with Africa. Before we get started, I'd like to welcome Sipo to lead us in the meditation.
Thank you very much, Kalu. Greetings, everyone. I greet you from South Africa. It is always good to be in this platform and to be a part of this dialogue. My name is Sipoka Zikwakweni, and let's just get right into it without wasting any time. I'm just going to invite you just to settle right in and just allow yourself to relax. If you are sitting in a chair, just sit back. We're just taking some time to ground ourselves in preparation of this dialogue. And if you can gently, I invite you, it's entirely up to you. You don't have to, you can close your eyes or just soften your gaze. And I'm gonna invite you to take a nice, big, slow breath through the nose. And as you release your breath, just allow yourself to come into a place of calm, a place of peace, and a place of focus. And I invite you to take another breath in. And gently releasing that breath. I'm going to invite you to take some time to think of an intention that you would like to set for yourself for this dialogue. We're obviously all here for a reason, and I'd like you to be intentional about why you are here and what you would like to share with each and every person that is connecting today. And as you connect with your intention, I invite you to take a nice breath in, just to really commit to your intention. And as you release your breath, I'd like to open up with a reading, with a poem. And I'm sure we all know this poem or a speech, however you'd like to look at it. And it is called Our Greatest Fear by Marianne Williamson. Our deepest fear is not that we are inadequate. Our deepest fear is that we are powerful beyond measure. It is our light and not our darkness that most frightens us. We ask ourselves, who am I to be brilliant, gorgeous, talented, fabulous? Actually, who are you not to be? You are a child of God. Your playing small does not serve the world. There's nothing enlightening about shrinking so that other people won't feel insecure around you. We were born to make manifest the glory of God that is within all of us. It is not just in some of us, it is in everyone. And as we let our own light shine, we unconsciously give other people permission to do the same. Tamaku. May this be a very powerful and inspirational dialogue. Thank you very much, Kalu. Thank you, everyone. All the best.
Thank you, Sipo. Appreciate it. All right, so Lorenzo, I'd like to ask you, maybe you have an opening remark, you want to say something before I welcome our guest to make his presentation, first in English and then in Yoruba.
Sure. So good afternoon and good morning, everyone. Thank you for joining us today, and thank you, Saipo, for the good words to start this conversation. It's probably the second time I've heard it, and always inspirational to get our mind framed in the right way. So appreciate that. So this is our session of Lion's Roar. We work with businesses at various stages in their journey to be a candidate to participate in what we are doing in terms of incubating, potentially investing, and helping businesses over the Black diaspora build. Right, we're a firm believer of entrepreneurship and Black business, and we look to have not only the entrepreneurs who are talking to us, but everyone who's listening, be part of that experience and hopefully get nuggets of information and insight to help them on their journey. So appreciate everyone joining us today. Look forward to talking to InvoiceFlip. Seems like an exciting opportunity. And let's get started.
Ubuntu. Thank you very much for this opportunity. First of all, Mr. Lorenzo Ball, the entrepreneur in residence, the Umukulu of the Osiri University, the Ogas of the Mukulungos, all the Malamis and Malamas of the Osiri University, ladies and gentlemen. Good evening from Abuja in Nigeria. And I say that in Yoruba, I say, Eku irole o. And I am going to be sharing my business idea today. Kindly just confirm to me, kindly just confirm that you can see my screen. Okay.
Yes, indeed.
Thank you. So my name is Layi Matthew. Once again, like I just said, I am the founder of InvoiceFlip. I'll tell a little story of myself. As a younger entrepreneur some years back, I lost a very good business opportunity. I had been able to close a deal with a multinational construction company to make them a big supply, which was to be on an ongoing basis. I lost the deal, unfortunately. However, I didn't lose it because the quality of my product and service wasn't good. I lost it because I couldn't meet up with the quantity required by the company. So by its business model, I had to make my supplies, then I had to wait between 30 and 60 days before getting paid. And they required a volume, which means that I required a substantial amount of capital to continue to fill that need. But I didn't have that capital as a startup entrepreneur. I looked to the banks and it was impossible for them to give a startup entrepreneur that kind of capital that I required. That got me thinking. And that is the problem that I decided to solve. The problem is that of access to working capital for SME vendors of credible corporations. The solution developed for this is that we want to convert confirmed corporate invoices into immediate cash by bridging the gap between vendors on one hand and financiers on the other, leveraging technology. So our product is the InvoiceFlip, which is a digital exchange platform that connects SME vendors to financiers via trading of receivable invoices. And the mission of this is to create a new asset class for African entrepreneurs by unlocking the value in receivable invoices. No one is really doing this yet. So our product, which is technology-based, is a responsive AI-based web platform that performs data analytics on vendors, their invoices, the corporations, and comes up with a lending decision. So successful applicants are then matched and onboarded. They are matched with onboarded finance from debt investors. Our target market is large. The African continent is a large continent which is trying to be the second largest trading bloc. And according to the Afrexim Bank, it estimated that the total amount of receivables that was traded in the year 2020 was 25 billion euros. That's huge. And we looked at it at InvoiceFlip, trying to start from Nigeria and scaling across the continent, that the market size in Nigeria is as big as 10% of that per annum. We tried out this idea by putting on a landing page before developing our full products. And interestingly, we had 12 vendors registered in the first week. We took 2 of them just to solve their problem manually, to be able to get a very good product and market fit. These two clients that we took on have done an average of 10 million naira businesses on monthly basis, on rolling basis. 10 million naira is about $20,000 on monthly basis. And we see a capacity to expand that much more. In fact, we've already spoken to a number of corporations that do between $3 and $5 million in invoices that are rolled over on a monthly basis, and they are interested and waiting for our products to come online. Yes, I am the founder of the business. I brought two people to help me, the CTO, Taiwo Olugbade, who is a techie, and the COO, Tundun Abodorin, a lady who is a guru in operations and an ex-banker as well. We've looked at our competitive landscape. We see those that currently play in that market are basically the banks and other financial institutions, fund managers, and retail investors. How is this going to work? What is the business model? I have summarized my business model in this little picture, but how will this idea make money? We make money by charging an average of 2% from both vendors and from financiers. And we see that will come up to a critical mass to be able to give us, very, very good profitability in the first year of operation. We are looking to raise $100,000 in this pre-seed round, and the intention is to be able to fine-tune our product to go to market and then to get the business started. From our projections, we are able to turn a profit from the first year of operations based on this level that we are starting on. Ubuntu. Thanks for listening to me in English.
Thank you very much, Layi. Would you please go ahead and make the pitch in Yoruba?
Once again, ẹ kúrò lẹ́ o, Láyíwọlá ni orúkọ mi. Èmi ni mo ní òwò, èmi ni mo bẹ̀rẹ̀ òwò tí à ń pè ní InvoiceFlip. Nǹkan tí InvoiceFlip ń ṣe, òun ni pé àwọn olókòwò kéékèèké tí wọ́n ń ṣiṣẹ́ fún àwọn iléeṣẹ́ aládàáni ńláńlá, a fẹ́ máa fún wọn ní ọ̀nà láti máa rí owó láti lè máa fi ṣe òwò wọn lọ. Nítorí wípé a rí wípé ìkan nínú àwọn nǹkan tó jẹ àwọn aládàáni kéékèèké lógún ní ọ̀nà láti rí owó láti máa fi ṣe iṣẹ́ wọn lọ. Ní pàtàkì, àwọn tí wọ́n bá ń ṣiṣẹ́ fún àwọn iléeṣẹ́ ńláńlá tó jẹ́ pé ìgbà tán bá ṣiṣẹ́ yìí tán, wọ́n ní láti dúró fún bí oṣù kan àbí oṣù méjì kí wọ́n tó rí owó gbà. Òun ló wá jẹ́ kí a ṣe InvoiceFlip yìí lórí ẹ̀rọ alárabíàṣá tí à ń pè ní íńtánẹ́ẹ̀tì. A ti ṣe sí orí ibẹ̀ pé tí wọ́n bá wá, wọ́n á lè mú ìwé tán máa ń fún wọn láti fi hàn wípé wọ́n ti ṣiṣẹ́ tán, wípé wọ́n kàn dúró de owó tán bá ti mú wá sí orí InvoiceFlip yìí lórí ẹ̀rọ alárabíàṣá náà. Àwa lè fún wọn ní owó láti máa fi ṣe òwò wọn lọ nígbà tí àwa máa dúró di iléeṣẹ́ ńláńlá náà láti san owó fún wa padà. A sì ti wò wípé ohun tí a fẹ́ kí nǹkan yìí ṣe ni wípé a fẹ́ kí àwọn èèyàn kó yẹ pé ìwé tán máa ń ní tán bá ṣiṣẹ́ tán wọ́n lè máa sọ di owó ní ìgbà kékeré. Nígbà tí a sì ṣe tán, a wò ní gbogbo Áfíríkà lápapọ̀, gbogbo nǹkan tí wọ́n ṣe ní irú òwò yìí ní ọdún 2020 ó bọ́ sí nǹkan tí a ń pè ní 25 billion euros. Tí a bá wò, Nàìjíríà ó lè ní ìdá 10 nínú gbogbo owó yìí. Nígbà tí a sọ pé kí a dán kinní yìí wò kí a rí bí ó ṣe ṣe, a rí wípé èèyàn 12 ni ó wá láàrin ọ̀sẹ̀ kan nígbà tí a ṣí ibí yìí sílẹ̀ fún àwọn èèyàn láti ṣe. Nínú àwọn eléyìí, a ti ń bá àwọn 2 nínú wọn ṣiṣẹ́, a sì rí wípé ọ̀nà owó tí wọ́n ń ṣe ìlọ́po ní ìlọ́po tí ó máa fún wa ní profit ni. Èmi ni mo jẹ́ ẹni tí ó ní ìran yìí, mo sì mú àwọn 2 láti tẹ̀lé mi. Ìkan ni wọ́n ń jẹ́ Táíwò, ìkejì sì ń jẹ́ Túndùn, èyí tó jẹ́ obìnrin. Àwa ti rí pé bí a ṣe máa pawó nípasẹ̀ bísínẹ́sì yìí, òun ni wípé a máa gba ìdá 2 nínú 100 nínú gbogbo owó tí ó bá wọlé sí wa. So ní àkókò yìí, à ń wá bí a ṣe máa rí owó bí 100,000 owó ìlú Amẹ́ríkà tí a ó fi bẹ̀rẹ̀ tí a fi jẹ́ kí gbogbo nǹkan kí ó máa lọ kí a bá lè máa ṣe business yìí kí a sì máa gbé káàkiri gbogbo ìlú Áfíríkà. A rí wípé ní ìgbà díẹ̀ kíní yìí yóò mú profit wá fún wa, inú gbogbo wa ó sì lè dùn. Ẹ ṣeun púpọ̀ pé ẹ gbọ́ mi.
Ẹ ṣeun. Thank you very much. Mr. Lorenzo Ball, over to you. I'm sure you have some questions.
Dude, so excuse me. So thank you for that. I want to make sure I'm pronouncing your name correctly. Is it Layi or Layi?
Yes, Layi.
Layi. All right. Well, thank you for that. I mean, one, let me applaud you on the pitch. I think the presentation was succinct, to the point. I think you outlaid the business, gave insight into the model, your ask, and obviously just your marketing potential. So I appreciate the structure and the information that you provided. So I did take a look at your presentation and read through it. And it is definitely a compelling business model. Few questions. I want to understand a little bit more about just the tech side of it. You mentioned data and analytics, and that's actually my sweet spot. So I have a lot of background in there. So I want to ask you a little bit more about that. And then I want to ask you a little bit more about your customer base and what you foresee your customer, being. I know you mentioned the small and medium enterprise as your target market. So I wanted to get some context on that. And I think that's what you meant by SME. And then lastly, just some of the projections that you made. So first, tell me a little bit about your technology platform. Looked at your website, looks pretty clean, but I'm sure there's a lot of back-end processing that you have to account for. So I really want to understand why data and analytics and the tech platform is your differentiator in this sort of business model.
Okay, thank you very much, Mr. Ball. So the platform, currently, of course, like you said, the front page looks clean and beautiful, but at the back end, we have technology built there. And with the technology, like I said during my pitch, we are able to analyze the risk involved, first of all, for the corporation, second, for the vendor, and third, for the invoice itself. We've tried to build a solution that can check on these three and come up with give us a risk level for each of these three of them. So how does that work? First of all, when we have a vendor come up to tender an invoice requesting for finance, the platform is built so as to, first of all, analyze the invoice to be sure that at the face value, it is a genuine invoice. And then the next thing is that we take the details of the invoice. One of the key details of the invoice that we take is the corporation whom that vendor is working with. And then the application integrates with a third-party platform that does credit rating, credit risk analysis, first of all, on the corporation, which is the key factor for us. We want to be sure the corporation is credible globally. We want to be sure they honor their credits, their trade receivables as at when due. And then it also does the same thing for the vendor, though that's because we lend principally based on the credit rating of the corporation. And then it also does all the KYC and anti-money laundering processes, checks that for both the vendor and the corporation. The aggregation of all of this, it then is able to tell us the risk level that is in that invoice. So at the end of that, it also automates an email to the corporation whom the vendor serves. And then the corporation goes ahead to confirm if the vendor is truly theirs and if the details of the invoice are correct, and also confirms if if there is any issue at all on the particular invoice. When all of that is returned to the platform at the back end, we are able to see the risk associated with that particular transaction. So the data analytics that goes into it is checking on the invoice, checking on the vendor, checking on the corporation, and it also checks on potential know your customer, KYC, and anti-money laundering, AML, basically. So that's what goes on the back end.
Yeah, I appreciate that. So it's like an underwriting engine for the most part, where it's looking at the various entities in the exchange and then providing a risk score. So appreciate that walkthrough. And I guess a few more questions on that. So obviously you're working with third-party data exchanges for getting evaluation and credibility of both the vendor and the corporation. So that's included in the cost of the transaction. And do you have variability within your pricing model? So meaning, I saw in your presentation you charge a certain percentage, like 2%. Is that a flat fee, or based on the risk model you change that fee to give that cash to the vendor?
Yes. So the risk model determines the interest rates. That's number one. Also, for the onboarded financiers, they also state when they are onboarding the risk level which they are able to take. So the combination of that makes us to be able to decide what risk model we can take, and the risk model also determines the interest rate that is charged. As much as possible, we also want to make sure the interest doesn't hit the roof, so that the business remains profitable for the vendor. So yes, we have very good relationship with those third-party API providers, like the provider for the risk score. We have very good relationships with them, and also those that do the KYC and anti-money laundering. The fees which are charged by those third-party API providers are already included in the total platform fee which we charge, which you say it's about 2% on the average.
Okay, thank you. And then from just the relationship with the business or the vendor, more specifically, is it an ongoing platform for getting working capital for the invoices, or is it typically a one-time exchange? What's that relationship concept?
So the relationship is a continuous relationship. It doesn't stop after the first transaction. So it's possible for one vendor to have multiple invoices listed on the platform for financing. And then once the vendor is captured once, the vendor is most likely captured for life. So for our go-to-market strategy, for instance, we are actually approaching the corporations. So I'll give an example. One of the corporations we approach says we have over 100 vendors. We are willing to make an introduction of InvoiceFlip to all of our vendors. And some of these vendors have ongoing contracts with the corporation. So we don't need to spend money for customer acquisition more than once. Once the customer is acquired once, that same customer, if he serves another corporation, which we don't yet serve, will probably be the one to make a free introduction to us to another corporation that also has a pool of its own vendors.
Okay. And then a few more questions, and I want to go into the customer, the vendor and corporation, and the financer, really quick. But lastly, at least from a technology perspective, how do you establish, trust, right? With these sort of three customer in your business model. So there's trust with the vendor, there's trust with corporation, and then the financing side. So how do you establish that trust that this transaction would be not only secure but viable?
Okay, so first of all, for the financiers, what we say we offer them, that we offer them alternative sources of investments from confirmed corporate invoices, which are already de-risked, which are short-term, and they are high yield. How do we achieve that when it comes to the side of the vendor? Like I said, we lend basically on the credibility of the corporation. So what we do is when we onboard a corporation, we have a discussion with the corporation and tell the corporation we want to discount all the invoices of your vendors. We want to be able to discount the invoices based on the fact that we know that that corporation is credible. They honor their contracts. They do not delay in terms of time. And then we also have their buy-in to ensure that for every invoice we are discounting, they are able to transfer the final payments to us. They're able to transfer the final payments for the vendors to us once we've been able to finance that particular vendor. In the case that corporation accepts that, then to a large extent, our risk is taken off because already the job has been done. You've confirmed that there is no issue with the invoice in any way. And then the corporation has also agreed to redirect the final payments to us. In the case of corporations that will not agree to redirect the final payments to us, we also have a digital solution which we are able to take. What's the word now? We are able to sign a post-dated check. It's not a post-dated check now. There is something that's linked with the account that makes the deduction directly from the account of the vendor when the payment is made in. It's made a direct debit. We put a direct debit order on the account of the vendor. So at the moment the corporation pays the final payment into the account of the vendor, we are able to deduct what is due to InvoiceFlip automatically. In the cases of invoices and applications that come in where the corporation does not agree to move the entire payment to InvoiceFlip directly, what we then, in that case, we are not able to advance them a substantial amount compared to those who are able to move the direct payments to us. So all that has been put in the algorithm that helps us to come up with a final decision.
Okay, appreciate that. So off of the technology a bit and talking a little bit about the vendor. So I saw that you work with a few vendors today to understand if your business model works and to flush it out, right? How has that experience been so far? What have you found to be good based on their feedback and the challenges that they may have with either the business model or their business working through this platform?
Yeah. So one of the things we did was after we did a test and onboarded a few vendors, we spoke with the vendors to understand the challenges they are going through. One, we spoke with the corporations, we spoke with their finance department, and we spoke with their procurement department to also understand the kind of problems they are going through, to understand the challenges they are going through. All of these things were the things that we gathered and used to develop the platform to solve the specific problems. What are some of the lessons we learned? Some of the lessons we learned included what I just explained. There is the risk of diversion of fund if the final payment goes directly into the vendor's account. So we have to find a solution. The first solution, like I said, is for the corporation to pay us directly. If the corporation would not pay us directly, then we have to do a direct debit agreement on the account of the vendor. That's one of the things that we learned. The second thing we learned is that in the immediate market, in the Nigerian market, we found that many of the corporations end up looking for international sources for their products and for their services because they need vendors who can do ticket size of $500,000 or $300,000. And in some cases, or in many of the cases, there are many vendors who, even though they can do the business, they don't have that financial capacity and they are not able to secure a third-party financier to help them to do that. Moreover, when they even get that, they need to get a collateral, which will be difficult. Nobody currently looks at the invoice as any form of assets. So like I said, our mission is now to unlock the value in that. So we've learned with the vendors that they need such kind of financiers to help their vendors so that the speed of business can be faster. We've learned from the vendors themselves that they will be able to do more businesses. They will be able to access capital without looking for other sources of collateral beyond their invoices. One of the lessons we learned recently, again, which I was talking about, the African Continental Free Trade Zone Agreement, is the fact that we can also discount export-related transactions. That goes beyond international boundaries, because there are many of them, because the export is made of two things. One, the document, and two, the products. So the lag time that it takes payment to come through for export-related transactions could hurt some exporters, who in this case will be vendors. So we found that is another way that's another lesson that we have learned. So this, in some markets, is regarded as factor finance. In some other markets, it's regarded as invoice discounting. But the extra layer on the business model of InvoiceFlip is that we have now included it with something like crowd lending, because we are not going to be using InvoiceFlip financing as well to fund the vendors. Those are some of our key lessons.
So I appreciate that, and it's definitely good that you have done some due diligence there with your market research, as well as what you're working with your current customers. Who's your typical customer profile? Like what type of companies?
Okay, so for the corporation, we're looking at companies like the Fortune 500 companies and the multinational companies. So I'll give an example. In manufacturing, one of the companies we've spoken to is General Electric Healthcare, GE Healthcare, which operates out of this market. In the telecom company, in the telecom sector, we have already very in advanced talks with Vodacom, which is one of the largest telecom companies in Africa. In manufacturing, PZ Cussons, those are the kind of corporations that we deal with, credible corporations, number one. Mm-hmm. On the side of the vendors, we look at any small business that provides services or gives products to the kind of corporations that we have mentioned. So let's take the telecom company, for instance. If I'm a consultant that provides probably a SaaS platform that is used by the company, or I supply some kind of products to them. However, the telecom company doesn't pay until after 90 days for all of their clients. Then that is the kind of clients we are looking at on the vendor side of it. Financiers, like we have said, it ranges from retail investors, someone who has $2,000 or $5,000 and looking for where else can I earn a little more, where else can I earn a little extra on my investment, up until corporate financiers, the banks, the other financial institutions, asset managers, and even the international financial body, because currently we are pitching some subsidiaries of the World Bank who are very keen on finding factor finance solutions for Africa.
Okay, thank you. And then I guess my last set of questions is now over to just the financial sort of model and your projections. So when I looked at it, just going with the number of 2% platform fee, based on how you actually get sort of cash into the business and the return on it, the transaction or the invoices paid, right, and funded seems to be pretty large, right? So it seems like there needs to be accounted for volume. How do you hit that number, given the large customer base you need? I'm just trying to figure out, based on your projections, how did you actually get to that number with the 2% transaction fee? Are you doing any other, sort of financial modeling, through that transaction to get to that revenue model?
Okay, so just like I said, we do an average of 2% platform fee for everybody that comes to use the platform to raise finance or to invest. So I'll give a quick example of one of the customers that I have waiting. So this particular customer manufactures a certain product that is used by PZ Cousins. The annual value of business done with him is ₦1 billion. ₦1 billion is about $20 million in 1 year. So he does an average of about $2 million with him on a monthly basis. However, when he's done with his supplies, he needs to wait about 30 to 60 days before he gets paid. So using this customer as an example, which is a big customer, then I'll use a small customer as another example. This particular vendor is willing to take a shave off 5% of his $2 million on a monthly basis. So if we take a 5% of $2 million, that's about $100,000 on a single customer from PZ Cousins. Now, I don't have the value for how much PZ does in a month, but I have another mid-sized company which is very credible, which does invoices to the tune of about $1 million on a monthly basis. Who does trade payables? They have trade payables to the tune of about $1 million on a monthly basis. If we are able to onboard about 30% of that customer base, we're talking about discounting $300,000 worth of invoices on a monthly basis. If InvoiceFlip charges 2% of this amount, then we're talking of about 150, am I correct? Yes, about $150,000 comes to it in fees. So basically, what we've looked at is we've practically looked at having about 5 major corporations onboarded that do a minimum of $1 million on a monthly basis. And we are looking at the possibility of having 20 to 30% of their vendors come on our platform. That's about 30% of that amount. So we see from there that we have substantial revenue, first of all, from the side of the vendors. When we go to the side of the financiers, the corporate financiers, and the retail financiers, whom we do here, what we have seen in the Nigerian market, which is a mirror of the entire African market, is that other sources of finance we have access to will do a minimum, we do an average of 10% of the value on monthly basis, about 10% on monthly basis. So we taking a shave off doing 5% and streamlining the application process and ensuring that if you apply and your documents are in place within 24 hours, we can get funded. We see that we can get a very good traction in a short time. So if we discount $1 million worth of invoices in a month and make revenue through the vendors, on the side of the financiers, we look at the possibility as well that they also can be making close to 5%. They will make about 2% of their money on the 5%. We have about 2% comes to InvoiceFlip, and 1% we can go into other costs that might be attached to the entire process. So if we do 5% of 1 million is 200,000. 5% of 1 million is 200,000 on two bases, can give us as much as 400,000 in a month, just to give an example of how we came up with our numbers. Of course, I can deconstruct that for you in the financial model, which we did.
Right. That's fair. And I definitely don't want to do that now, but I appreciate that insight. So probably two more questions. So from, and unfortunately, my partner couldn't make it today, but he's definitely compelled on the business model, and his background is more of a blockchain. He sees a significant opportunity in decentralized finance in this sort of business model where the financing side and the return side can be, different than what you're talking here. And it's almost pretty compelling, and it somewhat changes your business model a little bit. But I think from a technology perspective and an income perspective, it can open and unlock a few other doors based on what you laid out here. But I guess my question is, have you also evaluated like the single person entity market? in this business model, right? So I get it from a small and medium-sized business, but I know there's a gap and a challenge to single entity companies that's providing services. So as an example, it could be a truck driver, it could be a bus company who don't necessarily have that working capital, but maybe carrying large loads across country, don't get paid for 90 days, and so they're trying to figure out how to live, right? And that's a scale, right? I mean, that's thousands, hundreds of thousands of drivers and small entity companies that's dealing with it. And so I think that's a volume perspective. And if you have a technology platform that allows the ease of it with the risk evaluation, that's just another untapped market to touch as well. So don't know if you considered that, but it is sort of a thought to see how that market can be satisfied with this business model as well.
Yeah, thank you very much. So first to the first question on the use of blockchain. Yes, the use of blockchain is welcome here. In fact, I found a similar company that does this on the blockchain, though I don't know the country where their invoices are traded, where their invoices are discounted, but their coins are traded on some of the popular exchanges, including Binance. So of course, in the future, we see the role that blockchain can play in this, in hastening this to the solution. Now, of course, cross-country and for smaller players, we're looking at it. So for instance, we have several truck drivers who do inter-country businesses. They move agro-based products and solid mineral-based products across the borders in Africa. So we are also looking at how we can get into this, just like I said earlier. So what we need to do is to confirm that whoever the truck driver is making the supply to in the other country is credible. And how does he pay them? Does he pay them in cash, or has he put in place a letter of credit? If he's put in place a letter of credit, then we can take the letter of credit. That can give us a little comfort. And based on that, we can advance the players, the truck drivers, we can advance them money for each supply they make, pending when their letter of credit becomes cash. So we see that also on a bigger scale for people who especially are playing in the export market. So we're looking at how to drill down and to be able to touch every small entrepreneur who is a vendor to a credible corporation. It doesn't necessarily have to be the big corporations. Once you've been able to establish that you're credible, you follow the terms of your contracts and you fulfill them, then we're willing to work with the vendors that work with you.
Okay, good. I'm glad you explained that. So the last question is just about the ask, right? So you mentioned 100K for seed round. So can you break that down a little bit more and expected where those funds will be allocated and how you see that helping the growth of the business? Okay,
we need to do some more development. Of course, in the tech world, we keep on doing development. We also see that once we gain a little more traction, we need to be able to up our regulatory licensing. So currently the regulatory licensing that we have in place is working under the umbrella of another finance house who takes a bit of the 2% as well. We see that we need to spend some money on physical and digital marketing, especially at the initial state. While we don't intend to be the ones providing the finance for the actual discounting, we want to have some working capital as well in place to ensure that we start discounting invoices from the get-go, from the very first day. So of course, we have been pitching other sources of finance, but debt financiers who will come on the platform to trade. But basically what we want to do is we want to fine-tune our technology, fine-tune the business model to be able to take off. And that's why I'm here pitching today for equity funds, basically. So to recap that, we need some money for some extra developments, for some working capital, for some regulatory licensing. basically, those three things.
Okay, and I guess lastly on that, so how many customers do you have potentially lined up? And I guess it's from the vendor, the financer, and the corporation.
So
I know in your pitch you said there's two, but I'm assuming there's more in queue that you're sort of working with and needs capital to help engage it in work, right? And make this model work.
So our go-to-market strategy was to focus on the corporations. Once we get the corporations, we're sure the vendors are willing to go, or they are ready to go. Once we get the corporation, we only need one vendor from that corporation to start a viral marketing amongst the vendors. Once we get the corporation, some of the corporations are willing to make a direct introduction to all of their vendors, to the InvoiceFlip product for all of their vendors. So currently, we have about 5 corporations who do at least $1 million trade payables on a monthly basis for a minimum of 30 days. So we have that ready to go. How did we get that? During the customer discovery process, I personally sought to speak with the decision makers, both at the procurement and at the finance department of these corporations. I was not able to speak with for all of them, but I was able to speak with some of them, and I've been able to gauge that they are ready to go. So in addition, out of the 5, I have the second largest chamber of commerce. What happened? Can you hear me?
We still hear
okay,
you.
Sorry. Yes. Okay, so we have the second largest chamber of commerce in Nigeria, also showing interest to make introductions to their vendors. Though in that case, we need to check out their corporations, which is the most important part of the puzzle for us.
Okay, that's good to understand. So I don't have any comments or questions. I want to maybe finalize my comments is that definitely a compelling business. I think it's a market that can be served, right? I think there's room internationally for it, and I think using some of the things that I comments about before, especially on the blockchain perspective, and just building a risk model can be a pretty valuable asset, for your business and beyond, right? I think risk scoring obviously has been around for a while, but using it for this sort of asset class that you called it, can be pretty profitable. Definitely would entertain and like to talk to you a little bit more about that. I know unfortunately my partner couldn't make it today, but he has additional questions as well, and so definitely would entertain that conversation as you look to grow it and support your business.
Thank you very much.
Wonderful. Very quickly, let's take a few questions from the audience, if you don't mind. Mr. Lorenzo Ball and Mr. Layi Matthew, just a few questions from the audience, and then we can wrap up here. So here's some of the questions. What are the benefits for the investors? I'm assuming this person is talking about the financiers. Second, what is your projected growth in the next 3 to 5 years? Thirdly, what have you put in place for in-country regulations?
Okay, let me take them one after the other. For the financiers, I think that has been stated already. The financiers are able to make about 2%, minimum of 2% on their financing on a monthly basis for every fund that is deployed to an invoice, an average of 2%. Depending if the invoice then is for a period of 90 days, then that value could go up substantially. Where do we see ourselves in the next 5 years? Well, from my study of the Nigerian market, even in the tech space, there is a lot of bandwagon effects. Right now, I see the opportunity of a first mover advantage in the industry in Nigeria, and then scaling across the continent. Like we've seen with some other tech startups, two of them have become unicorns this year, one of them in the last 1 week. So where do we see ourselves in the next few months? In the next 3 to 5 years, we see ourselves, like I told the Umukulu of the Osu University, that we see another the birthing of another possible unicorn from this, because the market is hungry for this solution. The market currently is unstructured as compared to some other parts of the world. It's unstructured. In some other parts of the world, invoices and vendors are guaranteed their invoice payment as when due. In Africa, that is not always the case yet. So we see the possibility of getting to that. So we see this becoming a unicorn in the next 3 to 5 years. That's the vision. And then I want to remember the third question.
What have you put in place for in-country regulations?
In-country regulation could be very tricky because we found that in Nigeria, the regulatory regime is very fluid. It changes every time. So one of the things we've done during our customer discovery process is to talk with the operators. In particular, I spoke with a former chairman of the SEC in Nigeria, that's the Securities and Exchange Commission. I spoke with a former chairman of a commercial bank. I bounced the ideas with them just to understand the kind of regulatory provisions that we required. And then I spoke with other fintech founders to know how were they able to navigate the regulatory regime, especially when starting up, especially at the startup phase. And those are the things that informed what we are able to use now, which is to operate under the umbrella of a financial institution that is currently registered and regulated until we grow to the point where we could achieve our own independent registrations. That's number one. Number two is that, like I said, the regulatory regime is very fluid. In Nigeria, just in the last 1 week, the capital base for payment providers in the fintech space, the requirement was doubled. So it's a very fluid regulatory regime. So what we intend to do is to continue to have continuous engagement with the regulators, and as much as possible, have on our board of advisors those at the top of these agencies in the past. That's our plan. I hope I'm able to answer that correctly, Mr. Adedola.
I think you did justice to those questions. Thank you very much. This is a good place for us to wrap up, but I'd like to again invite Mr. Lorenzo Ball to share a few more words, maybe put a call out to invite some other entrepreneurs who are listening to perhaps consider applying to pitch at the Lions Roar. I think I'm in agreement with you that Layi did a great job today. He's not just an outstanding entrepreneur. I think he's also done a great job in showing how to present on platforms like this. So, Mr. Ball.
Yeah, thank you. So I will sort of just reiterate what I said. Like, definitely great presentation. I think just how you presented, how you explained your business, the impact of your business, the business model, the funding model was really superb, right? So as an entrepreneur, and during these sessions, I do time them, right? You were able to get your point out with really good detail within a 4 to 5 minute time period, right? And quite honestly, when we always talk about the elevator pitch, like what is your business and what it will do for me when you're talking to investors and people who will help support your business. And I think you did really good job at that. Secondly, thanks for answering the questions. It was very thoughtful and very insightful. I see you're definitely understand, the market and talking about the surrounds of it, as well as things that are possible over, the out years in your business as you look to grow it. So appreciate that. So look forward to continuing the conversation with you in a little bit more detail. So to everyone else, this is Lion's Roar. We are working with entrepreneurs on different levels, anywhere from advising, potentially investing, or even being executive in residence. And we're only looking to work with a few a year, right? But as we have these conversations, we really ask you, one, to share this so that people can understand how to look at business, how to look at their business and look at how to pitch their business, but equally, get value from the exchange and ultimately value if you are selected to be part of Lion's Roar. And so I would ask you to share this, share the recordings. If you know entrepreneurs, either yourself or others, apply on the website. And what we typically do is review them, select one or two that will present during this time period once a month, and ideally, hopefully, you can be part of Lion's Roar. So thank you for joining today. We appreciate you attending, and hopefully, you had a great experience from it. Thank you.
Thank you very much. Yes, go ahead, Layi.
Okay, thank you very much for the platform today. Thanks for your kind words and thanks for the positive feedback. Thanks for the questions as well. It's given me some stuff to go and think about too, and get ready on the journey to building Black African businesses that will be unicorns, like David Tufts said in the comment section. Thank you very much.
Mr. Lorenzo Ball, thank you. Mr. Layi Matthew, thank you. I'd like to also thank Janisha Francis, who's behind the scene, organizing and engaging the audience. Thanks to the wonderful audience who tuned in to listen. I hope you were inspired, and I want to say Ubuntu to every one of you.
Ubuntu.
Ubuntu.